It's 2025. And that means that we get to wrap up 2024, talk a little bit about how it went, and more importantly, talk about the future. We're going to talk in this video about two important things. The first is going to be about the Canadian economy. What do I think is going to happen? What do I expect to happen in the markets? How am I going to prepare myself? Second part of this video is actually what am I going to do this year when it comes to this portfolio, the Larch Fund. Welcome back. If you haven't been on the channel before, this is a reoccurring series we do where we talk about my portfolio that I've built in public for this channel, talking about building a dividend growth portfolio. It's all Canadian companies with the exception of the S&P 500. It's pretty well diversified. And I talk my whole way through building this. I work with you guys as I learn things, I adjust, and we talk about it every single month. If that interests you, please do subscribe to the channel. 2025 is going to be a great year. And I would really love to just keep talking about all the interesting things that are going to happen. Now, let me jump right into what I think is going to happen in the Canadian economy, because I think the word for 2025 is going to be instability. Now, that's kind of a fancy word, and you could probably say chaos, but the truth is that we don't know what this year is going to look like. And unlike 2024, we actually have a lot of potential headwinds that are in our face that could bring bad things or that might not materialize and bring more growth. Now, the very first thing we should talked about it on the channel before, tariffs. 2025 might be the start of massive US tariffs on the Canadian economy. There's no way the Canadian economy just rolls over with a 25% tariff and says, I'm good, and trucks along like nothing happened. If those tariffs hit, it's going to be devastating for all sorts of Canadian companies who are selling products that compete with American-based producers. I think probably the classic one we think of is either like energy exports, right? So oil and gas, but also you might be thinking of softwood lumber. We've had this dispute with the Americans before, but everyone knows tariffs are going to be bad. Now, tariffs do more negatively impact companies than they do consumers in Canada, which means that we're not looking at prices of things going up, but instead we're looking at companies being in trouble and so incomes going down, which I personally think is worse for the Canadian economy because it means that there is a fear in so many different sectors that the income you have now will not last. And if you're working in a small Canadian export focused company and you're looking at these tariffs, how do you reinvest? How do you take your money and say, hey, I'm going to buy this thing or do this thing that's going to cost me money in the short term, but bring me gains in the long term? You don't know if you're going to be in the same position. You're going to be making the same money in a couple of months. How do you make purchases on credit? How do you justify one of these, afterpay schemes for some big present for your kids or, make a purchase like a car or a house? So there's going to be a dampening effect. And I'm pretty sure that by the time we start seeing like December numbers for spending, and especially when we see these January numbers for spending in Canada, we're going to see the Canadian consumer dampened by the threat alone of tariffs. If they do show up, super bad for Canadian companies, really bad for the Canadian consumer, not good for the country. Alternatively, though, they might not. We might not end up in a position where the US just slaps on big tariffs. There might be some, but maybe it's not quite as all encompassing. And so most of the economy is spared and actually the consumer is doing better. I still don't know if the consumer is going to roar back to life this year, though. One of the things that I've seen many times, and especially if you are one of the many people in Canada that has like realtors or anybody in the real estate space in your social media world, is people talking about, oh my God, rate cuts. Bank of Canada has been cutting our interest rates on the Canadian dollar dramatically faster than the US. And so, some people are saying, wow, mortgages are going to get cheaper and everything's going to get better. And the consumer should theoretically have more money to spend. I don't know if I believe that personally. I don't know that I believe that Canadian consumer names, you're thinking a Canadian Tire, you're thinking any of the like apparel brands that are common in Canada, you're thinking even like a Restaurant Brands International, right? From a Tim Hortons or any of these like Canadian consumer staples or consumer discretionary are going to see massive increases in spending. I don't believe that's going to happen because we're at a point of instability. The challenge with the Canadian dollar right now, and I'll talk about this in a second, is that it's worth less than the American dollar by one of the biggest margins in years. And as our interest rates divulge, so as the American rate stays in this kind of range and the Canadian rate drops, well, there's no value in holding Canadian dollars. Now, one of the main things that holds up the Canadian dollar is the value of our exports, which is primarily natural resources, and unfortunately primarily go to the United States. So now imagine a double whammy of big tariffs cutting down American reliance on natural resource exports that they themselves can source elsewhere at a cheaper cost, and Canadians being in a position where we have lower interest rates. There's not as much value in holding your cash in Canadian dollars. I don't know how great it's going to be for the dollar. That's one of the things that I also think is important for us as investors. Right, this channel is all about investing in Canada. If you're not investing in a hedged way, or maybe investing in US dollar names, you could see your assets depreciate somewhat just because the dollar value they're being counted in goes down. Now, obviously, owning an asset is better than just holding cash. And if you're holding Canadian dollars right now as like an asset class, maybe don't. I don't know if this is, this might be sell low this moment right now. So it might not be like immediately scramble out, but I wouldn't be allocating any more dollars in at least the first month or two of 2025 into Canadian dollars, into like a Canadian treasury bill or anything like that, just because I don't believe the Canadian dollar is going to be holding up as excellent as the US dollar has. I just don't believe that. Now, of course, like I said at the top of this video, the year is all about instability. So I could be completely off base here. This might be, because we've heard this so often, this might be the canary in the coal mine warning that actually the US dollar might not be doing so fantastic in a couple of months, because everybody's talking about how great the US dollar is doing against global currencies, in our case, the Canadian dollar. Maybe the US dollar doesn't do as amazing in the next couple months because sentiment has been building it up so much. And then once it doesn't perform to expectations, all these people that are pouring international money into US dollars all of a sudden are like, oh my God, I got to pull it out. I don't know. Let's see. I got a couple of notes on the screen here as well. I'm interested in what else I might want to talk about. We've talked about the Canadian dollar. We've talked about the Canadian consumer. Let's talk about Canadian equities. Now, that's the primary reason I've pulled up notes here, because I don't want to be scaring investors by saying that I don't think the Canadian equity market is up for a great start, Q1, maybe even Q2 of 2025, and could be for a brutal year. Because again, we're stuck in a world of instability. If tariffs go on, things like Canadian oil and gas could be in trouble. Things like Canadian natural resources, right? The big company, and just like the area of like mining, lumber, wheat, right? Like so many of the companies that make up the foundation of this country could be in trouble, which means that everybody else will be in trouble, right? I talked about how all these people that work at all these companies might not be willing to spend. That means consumer companies are in trouble. We might have trouble paying back loans, which means banks might be in trouble, right? So I think Canadian equities are going to be a mixed bag. Some companies might do great. They might outperform. But we could also be in for a tough year. So let's get to the second part of this video, part 2 here. What am I going to do? Because as I've talked about, I'm seeing a bunch of different potential headwinds that are probably already slowing the Canadian economy a little bit, but could dramatically put the brakes on so much Canadian economic activity. As somebody who is talking about investing in Canada, how do I respond this year? Well, I'm in a fortunate position where my income is not based on a company that exports to the United States. I'm a teacher. I don't produce a natural resource or a good and ship it to the States at all, actually. And I'm not paid by a company that does. So I'm in a lucky position where I'm able to ride out the storm. Now, I'm going to do 2 things this year that I think are important. I've talked a little bit in the past about building a cash reserve. I've been doing that for the last little bit. I haven't actually made any big purchases in the Larch fund since October, November. And that's been purposeful. I would love to be buying constantly. I've talked about dollar cost averaging. I want to be buying these companies on regular intervals, but right now I'm building a bigger cash position. and I'm holding it in US dollars in my brokerage account. So I've talked about the potential currency risk. I might be the sucker who's paying the highest price possible, converting Canadian dollars to US dollars, but that's what I've been doing. This cash position is going to be used to buy the potential dip. And that's probably like headline of this video, buy the dip. Because I'm in a fortunate position where I'm not dependent, my income isn't dependent on these companies. And so great companies that could see downtrending stock prices are an obvious purchase case for me, right? And that can be companies I've invested in already. So, right, if I see like an RBC, if I see a Enbridge, if I see a Canadian Natural, if I see a National Bank, EQ Bank, CN Rail, or honestly, there's so many other great Canadian companies that we haven't talked too much about. If I see those companies, stock prices dropping, I'm stepping in. If I see opportunities that maybe aren't these great, well-defined names that I've been investing in yet, but that I think are great opportunities dropping dramatically because of some sort of news, right? That could be tariffs. That could even just be like threats against a specific industry, whatever it might be. I'm going to be buying. And I'm going to slowly purchase stocks throughout the year. That's my move. Now, I want to emphasize slowly because it is not the time as we look into, Q1 of what could be the most unstable year in Canadian stock recent history. It is not the time to be making a massive bet on what you think is going to happen. I think it's a much smarter play to see what happens and adjust accordingly. That's investing, in my opinion. If you're going to be making like options trades based on what you think might happen, right? You're thinking, oh man, tariffs aren't going to happen. We're going to see a rebound in the TSX. Hey man, awesome for you. I hope you are better educated than I am because I'm not in a position where I can smartly do that. And you know what? There are amazing Canadian traders out there that could help you do that. I'm just not that guy. So many out here. There's one from Alberta that I watch it semi regularly. His name's Jackie. But if you're gonna be trading options or just trading in general, amazing. I don't have the skill, to be honest with you. I don't have the skill to be talking about that to you guys. Instead, because I'm using this as slow, steady investment money for like a long time horizon, I'm gonna let the events play out, right? So maybe I'll make a couple purchases in the first quarter. But then, okay, we'll see what happens in Q1. And maybe the economy is in a really tough spot and we see the stocks drop more. I'll be really glad I held money. Maybe we're going to see the economy do well and they raise. Well, I had no way of knowing. And so I'll be able to keep purchasing and buying companies that I believe will do well in the long term. Because that's just my strategy here. And obviously, there are lots of different ways that you could play this. That's all I have for you guys today. I really do hope you enjoyed the video. I would love to hear your opinions. Number one, what do you think is going to happen to the Canadian economy 2025? I think it's going to be a big year, regardless of what happens. I just think it's going to be a big year. And number two, what's your move? What are you going to be doing in 2025? How are you going to be playing the stock market? Are you going to be investing in Canada? Are you looking to, diversify global ETFs? Are you going to be investing in the United States? Are you going to follow what I said as the December video and buy America? Right? I'd love to hear what you're saying. I'd love to hear what you're thinking. Yeah, let me know. I'm going to drop some pinned comments down below. You can just respond to those. I'd love to have a conversation with you guys about this because I just think it's really interesting. So many different things could happen this year. And we're each sort of seeing our own little version. You might be in an industry where you know certain things that I don't. Anyways, love to hear from you guys. I'll drop those pinned comments down below. Again, if you enjoy this kind of content, we make videos like this every single week on the channel. So please do subscribe to the channel, like the video. It means a huge amount, doesn't cost anything. And with that, I hope I see you in the next video.